Good morning, everyone, and welcome to G20 Week. The big event of the week is on Friday and Saturday, when the finance ministers and central bank governors of the G20 countries meet in Russia. Their deputies start meeting on Thursday, and the headlines should start to fly from then. Competitive currency devaluations, otherwise known as currency wars, are likely to be a major point of debate at the meeting. But given the history of this group of disparate countries with very different economic systems and economic philosophies, we can scarcely imagine them reaching any binding agreement on this point. The most I'd expect would be just a toothless agreement along the lines of currency should reflect fundamental values, or some statement that excessive volatility should be avoided, or some statement like that that nobody can argue with. Whenever you hear a comment like that, you should apply the Gittler inversion rule. What's that? The Gittler inversion rule is, can you imagine anyone saying the opposite? Can you imagine a central banker getting up and saying, currency should not reflect fundamental values, or excessive volatility is sometimes a good thing? Obviously, they'd never say that. So what meaning does it have when they say something if you can't imagine them saying anything different? Now, it may be significant that they say something rather than just saying nothing, but to me, a toothless statement with no action behind it really indicates just an inability to agree on anything substantial, which is basically the same message I'd get from no statement at all. Anyway, ahead of the meeting, the market's likely to be focused on euro-dollar and the reverberations from last week's ECB meeting. Are the Europeans happy with the currency's level or not? Comments by Japanese Finance Minister Aso last week that the yen had weakened faster than intended suggest that Japan is happy with dollar-yen in the 90 to 95 range and is backing off from further depreciation for now. That will reduce the pressure on Europe to keep its currency competitive. We think the pullback in dollar-yen and in euro-yen on Friday opens up a good opportunity for those who missed the boat before to get in for the ride back up. We target 93.35 for today in dollar-yen, while euro-yen may head back up to 125. This is Marshall Gittler, head of Global FX Strategy for IronFX, wishing you solid trading.